Hello everyone, my name is Mikas and I'm one of the technical analysts here at Onward BTC. Today's video, and getting into the habit of making these weekly videos, we're going to have another higher time frame update video. This video will mostly build upon the scenario that we presented in the previous video. So if you haven't watched that, make sure to check that out so you kind of have some context going into this discussion. What to look forward to throughout this video is going to be generally the same. We're going to first outline and update ourselves where we are in the scenario that we were kind of looking at in last time's video. And then we're going to have a look at kind of some more of the, traditional market, mostly the New York Stock Exchange. We'll look at some of the major indices to try and get a kind of general idea of how the equity market is looking and how that might affect price action on Bitcoin. And then we'll also have a look at the dollar in the forex world to kind of get an idea of how that might impact Bitcoin because of we talked about the relationships last time, but Bitcoin generally tends to have the same relationship as to the traditional market, to the equity market, whereas it tends to have a little bit more of an inverse relationship to the dollar market, which actually makes a lot of sense if you kind of look into fundamentals more so, cash flow, currency strengths and stuff like that. But that's a topic for a different discussion. So without further ado, let's get on into it. A brief summary of what we were looking at yesterday. Not yesterday, last week, was we were seeing this, very local bullish structure, essentially of higher highs and higher lows following off a sell-off. So this is still technically a counter trend move. A lot of people would say this is relatively corrective because compared to the larger trend, which is a downtrend, it doesn't even compare in magnitude. So a lot of people would call this relatively corrective. If you are a medium or lower time frame trader, obviously there's a lot of kind of trading opportunities within this, but if you're a kind of a higher time frame swing trader, you're trying to catch these major or more profitable swings. And since we're in downtrend, obviously those swings are going to be to the downtrend in this trend that we're looking at right now. So from a swing trader's perspective, which I am, the kind of the most critical moment is to try and figure out when continuation of the trend will happen. Obviously, there's a lot of different schools of thought as to how to do this. I have my own system. Each trader has their own system, so this will kind of differ from one trader or one analyst to another. So yeah, this is simply going to be my perspective. Is it correct or not? We'll see as this plays out. But I'd like to share it with you and hopefully share some of my insights as to at least what I'm looking at in the market. So in last time's video, we were kind of hoping or saying that best case scenario, if we are going to get a macro reversal, we would still want to see some kind of double bottom structure here. This is best case scenario is if we, after kind of a corrective pullback, we find another bottom in this local area. It could be a little bit extended, but we would want to see bullish divergence relative to the first kind of anchor low, or it could be shallow if if climates are really changing and we are going into a little bit more of a kind of bullish market. But we're not trying to predict where this low will fall just yet. Right now we're focused on trying to catch this reversal so we can enter a short and kind of sit in another swing to the downside, because that way we're not really concerned about where this low falls. Obviously, a good trade plan will have certain take profits and risk management around when you should move your stop loss to entry, and we'll go over that in a little bit at a potential swing short that we could maybe enter here if the conditions are right at daily closure, which is in about 7 hours. However, if you're sitting in a short or a with trend move, then even if this extends a little bit below than what you expect, if you have a running kind of target, then it's just more profit for you. We're not really trying to catch this knife. So this bottom doesn't really matter right now. We're going to be focusing on trying to figure out when this high is confirmed. So, we were kind of looking at some bearish, both regular and hidden bearish divergence across a few different time frames. In last time's video, that didn't necessarily play out. I think we made last time's video right around where this topping bar came in. However, we did get a kind of bullish reversal, or, not a reversal. We kind of got a bullish reaction, which was driven by the equity market because we got some Um, I mean, I wouldn't call it good inflation news. It just wasn't terrible inflation news. Inflation was kind of under expected targets, um, but it was still increasing. I don't know, kind of a confusing news event, but essentially it wasn't as bad as a lot of analysts thought, or at least the trend was predicted to be. So we got a little bit of, I guess, hype in the market around that. Finally, a little bit of a sense of relief around inflation. So that caused kind of another little pump in the market. However, that ran out of steam relatively quick because it was mostly a news-driven event. And now we kind of got another topping structure, another topping bar, which has actually been confirmed. And I realized we didn't talk about this in the last video, and this is something that I should have mentioned. However, confirmation of this topping bar, or a more significant kind of confirmation of a potential local top here, would have been closure below the 55, which is the green EMA, and the 21, which is the yellow EMA. We did not get that. And sorry, that's one confirmation, and the other form of confirmation is the following candle closure after the topping bar is either it completes the wick. We didn't really have a wick here, so and anyway, the following bar was it did not confirm this topping bar. So this was not really confirmed as a local top, so there was no reason to enter a short here. But what is interesting now is, with today's price action, also part of the reason why I'm making this video now, is that we're seeing that the daily candle is actually dipping below the 21 and the 55 EMA. And remember, this is on the daily, so these are pretty significant levels. Therefore, I think daily closure today is going to be relatively important. If we're able to close below the 21 and the 55 EMA, that does confirm on my system a local top, and therefore I would be inclined to enter a managed short, meaning that 5 to 10% risk, depending on your position. I mean, your portfolio size, stuff like that. This is probably going to be a 5% trade for me, 5% risk, that is, just because it is a with trend move, so it gives me a little bit more confidence. And then a little bit later on in the video, we'll kind of get into some expectations as to where this might reverse. But yeah, that's for a little bit later down the road. So first of all, the number one thing I want to bring your attention to is today's daily closure will be relatively important, at least in my system. If we're closing below the 21 and the 55 EMA, I believe that would confirm a local top. Another kind of school of thought of confirmation is going to be, you got to look at your most local kind of highs, especially in this, it's not really an ascending wedge, but it kind of is, which is also a distributive pattern. So, if we are closing within these highs, it does induce or bring a little bit more bearish pressure into the market, because now we have, shorters that are going to be looking at these kind of entries, right? So, it's pretty clear. I think it's relatively likely that we'll close below the last local high, which is around, 23.85. The more interesting kind of high to be closing below is going to be this 23.4K, which kind of coincides with that 21 and the 55 EMA. So I think if we're closing below 23.4K, it's a relatively decent, signal confirming a local high. So that would kind of prompt me to start looking for a short. Right, so at least, and this would kind of dictate our entry levels for a short, right? I would probably set an order right at 23.4, and then I would set an order somewhere around the 21 EMA, so 23.5 maybe, or yeah, instead of setting a order at the 21 and the 55, maybe I'd set an order somewhere in the middle, like right around 23.5, and then I would set kind of a little bit of a deeper order right around this previous high at around 23.85 or something like that. So, that kind of establishes our entry points for a short. In terms of a stop loss, you always want a stop loss in your trade. We kind of want to, find a safe level above these wicks to the upside. And that'll kind of, we'll get into that when we go to the next chart where I have, a little bit more of a scenario laid out. And then finally, the other thing to plan is going to be your take profits. Where do we want to take profits? And how, we're not really trying to predict where this low might fall, but we can try and get a general sense of how volatile of a move this might be by looking at some of the other markets that sort of relate to Bitcoin. Would this be a very shallow retracement? Would it be maybe a little bit deeper of a retracement, or should it be, a kind of an exaggerated or an extended pullback, right? So, we might not necessarily know where this falls, but we can kind of get an idea of maybe how volatile this pullback could be. And actually, yeah, without further ado, we'll get right on into that, trying to figure out how volatile of a pullback this might be. So as we did last time, first we're going to look at the S&P 500. So once again, I think this is the day. It was on the 9th or the 13th. It was somewhere around here, because we have this large gap, and this was literally the day that good inflation kind of news came out, which gave us, a little bit more of a pump in the market. So we can see that, we have overcome this kind of significant level of, support at one point, support at this point, flipped resistance at this point, also acted as short-term resistance here. So, this is a relatively significant level, and we were able to push through it, not necessarily during market hours, because inflation news came in pre-market hours, and it was actually futures that pushed us above this huge key level. You can see that in the futures chart on the futures market, we are kind of pushing up against major resistance right now, but we have technically cleared it. The only resistance that's kind of still in play is this dynamic 200 simple moving average, which is a very significant level to keep track of in traditional markets. So, until we overcome this, I'm not really, saying that we're going to get like a dramatic continuation on the S&P. But, it's something to take note of, especially in the SPX, the fact that we have overcome significant resistance levels now. So a little bit of a pullback is kind of expected. Corrections are always good, and they're very healthy because they give you opportunity for more buyers to enter the market. And again, how this pullback, because we're at a 1-to-1 correlation, not a 1-to-1 correlation, but we're in the same kind of directional relationship with Bitcoin, can kind of dictate how much of a move we could expect in Bitcoin. Obviously, volatility is higher in Bitcoin, but I think it's relatively safe to say, not safe to say, I shouldn't say that, but according to my analysis, I think we could kind of expect a pullback into some of these, resistance levels, which now should be acting as support, as kind of a back test to see if they are in fact strong support. Previous history indicates them to be support, so a back test will be kind of critical to tell. However, importantly, is the distance from where we are now to the support levels is relatively minimal. It's about 2%. So, not too huge of kind of a margin, meaning that, I don't think on Bitcoin we're going to see a massive extended pullback as long as these supports hold, right? If these supports do not hold, then it's game on. We could, go all the way back down to, around 4K. So, this is kind of the first area to revisit and test the support and look for a reaction, right? But ultimately, it's not that far away. So I think we're also coming into a weekend, so, that gives opportunity for Bitcoin bears to do a little bit of extended of a move. But what I'm trying to say is, I'm not going to kind of expend a macro continuation in macro trend here just yet until we see this like resistance flip support fall through. So as long as this is holding, I don't think we're going to get an extended pullback, meaning that we should expect maybe a cleaner double bottom kind of in similar levels, or even a little bit more shallower of a pullback. So that informs my risk management, meaning that I'm going to be a little bit more aggressive with moving my stop loss. That's essentially what that's telling me, because S&P is not giving us too much room to the downside, and I don't want to be stuck holding a short if I don't think it's going to fall through the floor, essentially, right? Because I'm playing the downside here. So that's just going to tell me that I'm going to be a little bit more aggressive with my risk management, with my position management. Not too much really to see. It's the same kind of story in futures, right? We're back testing this resistance now as support. Will it hold? That's kind of the question for the next couple of days, kind of the next week. And I'll keep an eye on it, obviously, because if I enter a short, then it's going to be very important to me as well. So now let's have a quick look at the dollar. So once again, for those who might be relatively new at looking at these other kind of markets, Bitcoin tends to have an inverse relationship with the dollar, meaning if the dollar is going up, or if the if the dollar is in a bullish trend, as we can see here, Bitcoin tends to be bearish. By that same token, if the dollar is bearish, Bitcoin tends to be bullish. So what we can see here is we did get a little bit of a breakdown past that 21.55 EMA, which actually coincides with that inflation news as well, because that was not necessarily good for the dollar. However, we are now seeing a little bit of a clean recovery, meaning that we should, hopefully expect a little bit of an extension in the dollar, meaning that we've reclaimed the 21, the 55, and kind of this pseudo trend line, if you'd like to call it a trend line. So we've kind of reclaimed the most immediate supports, or our local floor, meaning that bias is to the upside rather to the downside. How high could it go? Not really, my game. I'm just looking for bias. That's why I'm checking these alternate indices. However, conservatively, I think that, kind of pushing local lows, either around 107.2, so that's about 0.4%, or a little bit higher, maybe test this other pseudo trend line a little bit higher, about 1.5, percent, or at 108.3, with ultimately, until we put in a, the upside is kind of, you could go forever because there's unlimited upside potential. However, I'm more so looking for bias in this case, and bias on the dollar right now is bullish, which is good for our inverse relationship because it adds confluence to our short bias on Bitcoin, right? Because of that inverse relationship. So with kind of other markets and other indices kind of reinforcing our bias going into Bitcoin, let's have a look at what a potential kind of trade setup would be. So once again, confirmation is going to be closure below the 21 and the 55 EMA, along with this last local high here at around, we can actually mark that off because those are going to be important entry points here. 23.4K, and let's call this last kind of local high here at around 23.8K, right? So if daily closure closes below, namely 23.4K, then I'm essentially going to look for a short, because in my system that confirms a local low in a bearish trend. A local high in a bearish trend. Therefore, that kind of signals a bearish continuation for me. So it is worth taking or risking a short here. In terms of entries, obviously that previous high, like we talked about, 23.4K, maybe throw in entries around the 21 and the 55 EMA as well, or kind of you can average them because they're so close together. And then also another one around 23.8K. In terms of a stop loss, we were talking about we wanted to go a little bit higher than the wick high of the most recent swing high. Luckily we have this kind of major 0.618 bearish retracement level, which is kind of off the last wave, or the kind of extension downward. So I would probably look to put my stop loss a little bit above that. I think right now I have it set to 25,850. If you wanted to optimize your stop loss, you could look into some what's it called, liquidity, like heat mapping. You can essentially go and see where everyone else has set their stop losses, or where there's a lot of liquidations, and then set your stop loss a little higher than a pool of liquidations in this area. Kingfisher is really good for that, actually. Now we were kind of talking about where would you want to take profit, and our bias was shallow retracement, right? At least that's what the equity indices kind of told us, that a pullback might be in store, but it could be minimal just because we've overcome major resistance, which we now have to backtest as support. And I told you that would affect my risk management, and here's how. So I'm going to be targeting the first local low most immediately, and that's going to be relatively shallow, right around 22 point, call it 7 if we want to make a nice round number, which kind of coincides with a more macro bullish retracements right around that 0.382. So that's enough confluence for me to want to take profit here at around 22.7K. And that would trigger me to tighten my stop loss. Now, how much would I tighten my stop loss? If you were, a very safe trader, if you're a very, risk adverse trader, you could move it to entry. However, that's not too far, so there is kind of a risk that you would get wicked out. If you're a little bit more of a risk, friendly trader, I want to call it, I would probably cut it down to about by half, probably around 24.5K, kind of like around this, right above this wick high. Once again, if you want to optimize that, look at liquidity data, right? Liquidity heat maps, try and find the closest pool of liquidity in this kind of area and set it right above that. Right, so that is key, because this is what will activate more stringent risk or tightening of my risk management. Past that kind of standard, I'm going to be targeting the next kind of higher, or the previous higher low, right around 21.2, maybe 21.3 if you want to be a little bit safer. And then another target right around 20K, just because it's a nice big round number. So I like to, try and edge the market a little bit. So I would probably put it around 20,050 or 100 if you want to be even safer. Past that, I was looking at some of like Elliott extensions, Fibonacci extensions, and that 61.8% is going to be sitting, somewhere around here. You could also target these kind of, clusters of lows here if you're a little bit more risk adverse. That would probably be a good take profit as well. However, I'm looking to kind of maximize, and I think past this, maybe set another, actually let's do this. I would set another take profit here. I would not target the 61.8% extension, and then past that, I would leave it as a kind of as a running take profit. So I'd probably close 25, 25, 25, so that would be 75% of my position closed here, and then I would leave the last 25% to run in case we do get that extension, if we see a breakdown in kind of the equity market, or some black swan event that would kind of lead us to continuation of the macro downtrend. Namely, I'll probably look to close that last 25% somewhere in the 15 to 16K region. But this is kind of the plan that makes the most sense to me, especially taking into account kind of bias of the equity market and the dollar over in the Forex world. So yeah, I'm going to leave it at that. This is 22 minutes. I want to keep my videos right around there. Let me know if this was informative. Let me know if you have any questions. And yeah, make sure to join the Onward BTC Discord. We're in there. Feel free to ask questions. Yeah, my name's been Mikas, and I'll see you guys in the next one.